What about the financial markets? So when we invest in stocks or bonds or some kind of LLC or some pooled money asset where we're not a direct investor or we're not following commandment number 3, we don't feel the bumps in the road in terms of what goes on with that investment. We just don't feel it. It's a dog that didn't bark, okay? The fees and the costs are not visible to most investors. The bloated salaries of the insiders, the C-level execs, the board of directors, etc., they're just not seen, okay? Nobody knows. But income property, on the other hand, the most historically proven asset class in the world, we see all those bumps. All those dogs that don't bark, we're feeling it, okay? And this is how investors get frustrated because they've got to learn, or I should say we've got to learn because I got to learn it too, okay? We've got to learn to manage our emotions about this kind of stuff when there are problems. See, I can't tell you during the Great Recession how many times I heard from one of our investors something like, I don't know if this real estate thing is really that good. I mean, I've got this property, okay, it breaks even, now you can get positive cash flow, but back then, interest rates were higher as we were moving into that, and prices were higher, right? So I got this property, it breaks even, and, I have to put up with these hassles. Why am I doing this? This isn't so great. What if I just put it in the S&P 500 index fund? I'll be better off. But then, undoubtedly, they go and get their taxes done the following year. And they say, wow, my tax bill was a lot lower than I thought it would be. I like this property thing a little better. And then they end up maybe selling or refinancing the property after that. And that whole thing that's happening behind the scenes, the multidimensional characteristics of the asset class, is unseen until an event occurs. So every single month, we've got to live with our tenants and put up with that issue, but only one time will we sell the property. So only one time we get to say, wow, I liked this. Hopefully you liked it, if it went up in value, right? Or if the debt was debased by inflation or whatever, right? If the sale is a good result. Only one time we get that. But if we own it for, say, 5 years, we got 60 times, 60 months, right, of times where we're dealing with stuff. Maybe we're dealing with a tenant who pays late or doesn't pay at all. Maybe we've got to release it to a new tenant, and we've got to do a make-ready, and that costs $800. Maybe there's some repair item or something like that. We get to live with that every month. But only one time do we get to live with the big event, the sale or the refi till you die, the refinance event, right? So all these dogs aren't barking in the background as the property is creating wealth for us, because we all understand how it's a multidimensional asset class, how we earn a return from so many ways, from appreciation, from tax benefits, from inflation-induced debt destruction, from positive cash flow, et cetera, right? All these ways, right? But we don't see a lot of them because they're behind the scenes. Look, a famous ship that they thought was unsinkable sank because of what it did not see. The iceberg, mostly underwater, right? The Titanic I'm talking about, right? So this is important to understand, those dogs that don't bark, right? So what costs do you see every month, right? What benefits are hidden from your view? What are you missing out on? These are questions to ask ourselves, right?